Okay, so this is Mind Print and it's Kelly here in another episode. Today we are talking about finance and I'm here with Mr. Daniel. We are going to be talking about finance. So stay tuned, but let him introduce himself first.
Okay, hi everybody. My name is Daniel. Amankwah-Aboagye. I'm a business manager at Fidelity Bank's inclusive banking and then youth banking unit.
Okay, so today we are generally going to talk about finance, everything finance. Even that your small ass one sitting in your pocket, we're going to be teaching you how to save it. So the first question for today is, how do you think a student, let's say in the university setting, should understand assets and liability and how to leverage on them?
Okay, so in the basic understanding of assets and liability for a student, asset is anything that you have or you possess that can generate something from you. Like it is important, you can get interest on it. Let's say you have a treasury bill, you have a fixed deposit, there's something you own. So let's say if you have ideally you have an iPhone 17 that costs probably 18,000 Ghana cedis. That is an asset. What you use it for will determine whether it's a liability or an asset. So a liability, asset is the things you own that you can generate things from, and liabilities are the things that are just free flow. You just use it, like spending money. The money is just going. Liability is something that you can easily use. Asset is something that you own, and then you can generate something.
Okay, so our laptops are supposed to be assets, but then some of us, because we always buy data and connect hotspots, it becomes liability material. So
No, even if you connect hotspots,
yes,
data, the internet is fine. What are you using that time for? If you are learning, you are basically students. So if I go to YouTube and I learn a new maybe AI skill, I am building myself. It's not a liability at that point. If I go to YouTube and I'm just watching music videos, something that is not inclined academically, because as of now I need academic stuff, then it becomes a liability. You are using that asset to generate liability instead of generating your personal good or assets for your education. Yes.
so now we understand that your laptop can also be a liability. For those of you that remember,
That's a very use of something.
then also uses. So we have our phone, we have our laptop.
You have your book. Your book is an asset because you purchase the book. Yes. You purchase the book, you don't read. It comes from an asset to a liability. But if you use it, you write your exams, you pass, it's becoming an asset.
So before we started the episode, before we started this conversation, I thought assets were just something that gives you money.
No, it's not.
Yes, but now I've learned that it's not only money, it can be education or anything that you are just doing.
The interesting thing is that we being students, yes, your friends can either be a liability or not. That's the point I was making. Assets and liabilities are not only limited to our finances or our books or education. It's also factors in when it comes to our human relationships. So your friend can either be an asset or a liability to you, depending on how you do. So if you have friends, and the funny thing is, you know when your friends are being a liability, but you just choose to follow the crowd because you're a student. But you have to know, some friends are assets. They help you build your life, steady, your Christian life, whichever religion you believe to. And then some friends are also liabilities. You know you are not getting anything profitable with them, but you still continue with them. So we should look into that as well. Assets and liabilities when it comes to our relationships.
You're seeing building meaning assets. So are you saying if they are building you also the wrong way? Maybe they are also giving you maybe some lessons that are not morally right, but they are also okay for life. Are they also assets?
If something is not morally right, then definitely it won't be okay for life. Because we are all old enough to know wrong from right. So most of the things are choices. So when choosing your friends, you should choose friends who become assets to you. And I think I was making a point earlier about the two main rules students should go by. Education is there, our social life is there, obviously. But when it comes to finance, first of all, try and live within your means as a student. Don't spend money you don't have, and then you will have to go. So rule number one, live within your means. And then rule number two, any money you have left over, you save it. Because once you are done with school, it's not automatic like you start working. So for the 4 years, if you're able to save, you do your national service, hopefully you save some amount, at least for the 1 year or 2 years that you are taking to get a job. At least you have something small to take you through, rather than going back to rely on your parents. So don't spend beyond your needs, and then save as much as possible.
So about the saving part we're talking about. See, someone know for rich homes,
Yes.
let's say average homes.
Average.
Come to the university, the money is very low. You are trying to balance through the system, people come up with savings. So with someone like this, how do they go about their normal living in the university to really save maybe like some small thing that
So when we talk about savings, people think, okay, I have 100 cedis. I have spent 80 cedis. Left with 20, and I'm saving the 20. If you are waiting to be okay before you will be able to start saving, then you are wrong
never
from the onset. Saving is to help you save, even with the minimum. Even if it's 5 cedis, you are saving a bit. That is like if it is 10 cedis free. You don't have to wait to be okay. Oh, I spent this money, I have this left over. Now, you save what you have. And then one thing we have to know, for every amount we have, you can break it down. So let's say if I have 100 Ghana cedis, I can break it down. 50% of the 100 cedis will go to the things I need. Okay, my food, my water. 50% of the money you have. 30% will go to your wants. Maybe you have to buy a book here, you have to buy a shirt here, fine. And then 20% is saved. So it means if you have the 100 cities, 20 cities is going to be saved. Regardless of whatever happens, you are saving 20 cities. If you have 1,000, it means you are saving 200. You get it? So you can make it the percentages like that. 50 for your needs, 30 for your wants, and then you save the 20%. So then when you do like this, the amount doesn't even matter.
Yeah.
Because if you have 10 CDs, you can still break it down. 5 CD for your needs, 3 CD for your rent, 3 CD for saving.
So since you are with debt, and let's say we are talking about someone trying to save,
Yes.
what do you think is the best time to have a bank account, or you feel like you can always have a bank account? Because I feel like bank always deducts some percentages every month, and if you are someone that do not have like enough cash and you still want to have a bank account, you end up using. So what do you have?
So there's this misconception about banks being deducted. So let me break it down. In simple terms, most banks have 2 types of accounts. You have current accounts, you have savings accounts. Current accounts, they deduct you because mostly it's for high-level workers, for people in business. So you'll be deducted every month. And then we have savings accounts, which there are no deductions at all. The only time you get a deduction on a savings account is if you go in for any value-added service. So let's say if I have a savings account, I'm not being deducted. My money is amount. But if I want a Visa card on my savings account, it comes with maybe a 10 cedis a month charge, a 15 cedis because I took the Visa card. If I don't take the Visa card, nobody's taking or charging me. You get it? And then there are some accounts. That's why, as I told you earlier, I'm part of the youth banking segment for Fidelity. So there are some specific accounts targeted for youth, where let's say the youth banking account we have at Fidelity, there are no charges on the account. It comes with a free ATM card. And that's all you need is just 5 minutes to sign up. You need your Ghana card and then either your student's ID card or your admission letter. It takes 5 minutes to open. There are no charges on it. You get your ATM card too. So you just have to know and then ask questions.
I think this is going to help our viewers. So the last question for today is going to be about miscellaneous.
Okay.
So people don't really understand that word, and I want you to break it down and why we should have it in our budgets.
Okay, so miscellaneous is, let's say I'm building a house. It costs, let's say 100 Ghana to build a house. I'm budgeting 80 cedis for my materials, for workers. I'm budgeting maybe 10 cedis to pay the workers. And then I'm putting 10 cedis down. So this miscellaneous is in case I have any gaps, something happens, which is not supposed to happen. I have money to follow. Okay, I want to buy a car. The car costs 12,000 Ghana cedis, but I'll put 13,000 Ghana cedis and now 1,000 payments. In case I buy the 12,000 car and then I need to change the cars, I use that extra money to, yes. So it is just to bridge the gap. In case you have any issues in your budget, we fall on that to rectify the issues.
So everything has been well explained. Thank you, Mr. Daniel.
Thank you.
Okay, so a big shout out to Fidelity and Mind Brains,
Where every conversation
leaves a print in mind. Thank you very much.
Thank